Today, we will be discussing how you can make $200 a day trading Bitcoin. Now, while we will be focusing just on Bitcoin in today's video, the key here is to look for volatility. So, some people choose Forex, some people trade Ethereum and other altcoins. I personally like Bitcoin currently because we've seen this insane parabola. You know, if you go to the 1 day time frame, currently we're on the 1 hour, but if you go to the 1 day, I mean, look at this insane parabola. This is insane. Imagine opening a position right here, as we did, and just riding this right off the top. You know, the thing in leverage trading, which we will be discussing later in this video, is understanding potentially being liquidated. But if the price doesn't drop below this, you know, if you opened a position right here, as I kind of was showing, if you opened a position right here, as we kind of broke that resistance right here, and rode this, I mean, this thing is not dipped. You're not going to get liquidated. It has not done that yet. So this is the power of leverage trading. This is the power of understanding a little bit of technical analysis. And really in this video, what we're going to do is focus on a key strategy you can use, which we'll cover during this video, a key strategy you can use to actually create wealth on a daily basis, so $200 a day. And then we'll move into, you know, using a little bit of technical analysis, understanding the charts a little bit better, and understanding some key indicators. So let's go to the 1 hour time frame. Take a look at a little example that I did this little trade right here. So we have this descending triangle. What you want to look for in a descending triangle, which is just basically a different way to show a trend line, is lower highs, higher lows. So you have a high right here. You have a little dip, a lower high, higher low, lower high, higher low. We're about to make another lower high, but we broke out of this descending triangle right here. So we can zoom in even further. And what we saw was a blow off the top. So we blew past this descending triangle. And one way you could actually measure this, and again, we'll go over all how you can do this in detail, but this is just a nice little recent example to show you the profits you could have made. So this base of the triangle right here, so we'll make that a straight, let's go here. So you see this base of the triangle, this length, that's just a guesstimate basically. Right there is about how much you could be expecting. So, you know, maybe we'll see this dip back down, maybe we won't. But the key thing here is how to measure. So a conservative estimate would be the last high out of this triangle, which we broke right here. So then we went a little bit higher. So basically what you would have wanted to do was enter a trade right around here, set your stop loss. So we can show you around how you would do this. So if you're using TradingView, you can kind of show this through a long position. So you would enter the trade right when it broke out. Maybe you could hop in on that 1 hourly candle right there. Set your, let's see, you could set your little short position right there. And then your long, you could set like a conservative estimate would be right there. So you could target 2,000, so right around there. So right around 3,500, let's see, or 35,000 rather. And then you have your stop right around this level. So you're only risking around 1.5%, but then you're gaining, so it's about a 1 to 7 ratio. So you're gaining about 7%. Now, you might be asking yourself, well, if that's what I'm going to do, how am I going to make $200 a day? That's where leverage trading comes in, and that's really the key topic of this video. So leverage trading allows you to basically double, triple, quadruple, 10x, 20x, 50x, 100x these profits. So imagine that. Imagine you would have done this nice little stop loss right here. So you would have only been risking about 1.57%, but your gain is 7%. Now, let's just put a little 10x leverage on that. Okay, now what would your gains be then? So let's just say you were trading with $100. So that's an insanely low amount. So you're literally risking less than $2. Man, you'd have a pretty low risk tolerance right there. But let's say you were doing that. So just $100. So let's draw that out. So just $100. So $100 times 10. So you're doing a 10x leverage. You're now controlling $1,000, right? Okay, now what's $1,000? What's 7% of $1,000? Well, let's go there. That's $70. Oops, my apologies. Okay, so now you're profiting $70. You took a nice little profit there, and again, that's conservative. So let's say you would have, not done, you would have had a higher long position. So, right around where we hit this. So you would have had around 10%. So that's $100. So, you take two of those trades at 10x leverage a day. That's you just made your nice little $200 a day. But even better, let's say you use $1,000 for trading. So you're risking what's 1.57% of $1,000. You do the math there. Still pretty low risk tolerance. And I'm not going to do all the math for you. This is something that you kind of got to learn, and that's why it's interesting to trot out. But you do $1,000 times 10. So $1,000 on 10x leverage. Same 7% gain, but now you're controlling $10,000. And again, to make money, you don't have to have the best handwriting. This is TradingView, so I'm drawing this out. So it's interesting. In school they taught you that you had to have great handwriting to make money, but this is not the case. I've realized a lot of very successful people have horrible handwriting, which is kind of hilarious. It's really just the academics that have the best handwriting. So $10,000 you're controlling. You're using 7% leverage, or let's just say you made this nice little profit here. So let's just say you did 10% of that. Okay, now what's 10% of $10,000? Well, that's $1,000. So you just made $1,000 a day. So you average that out. Okay, so you just made $1,000 in one trade using $1,000 on 10x leverage, right? So you use 1K on 10x leverage equaling 10K. Now you this little trade right here, which is just one example, that it just simple technical analysis, nothing fancy at all. Literally understanding trend lines and along a stop loss position. Now you just made again $10,000, and in 10% of that, or you just made $1,000 rather. If you were doing 100x leverage, you would have made $10,000. And the key here is once you make this, pull out your risk. If you're scared of losing money, if you're going to comment on this video and go, oh, but I could lose money, I could get liquidated. Not if you're using proper stop loss strategies. If you were doing this, what we just showed you in this trade of $1,000 in 10x leverage, trading with 10,000, controlling a $10,000 position rather, and you made 10% profit, well, you just made your initial investment back. You just made that $1,000 back. So pull out your initial investment. Pull out that $1,000 if you're scared about it. And go from there. So that's just one little example of a nice trade you can make. And you can see this, here's another great example. There's so many examples. I mean, this is why Bitcoin's incredible. And as I said, it's not just Bitcoin. But here's another little example. All right, so we were bouncing in this little consolidation pattern, going up, down, up. We broke out of here. We formed another little consolidation. But when we broke out of this, I mean, absolutely insane. So the key thing here is to be able to identify just basic patterns, drawing out support and resistance lines, and understanding that support and resistance is never an exact line. It's really a box. You see, that's why I have these pink boxes, these red boxes. These are all different support and resistance lines. These triangles are different patterns. And if you want to learn more about the actual technical analysis part of this, a little bit more in detail, just comment down below what patterns you're interested in, and I can cover these things as well. Highly recommend Crypto, and then Carl the Moon. Great YouTube channels on technical analysis. Also, Crypto Jack does a great job. So now that we've covered that, let's actually dive into here. What we can do, go right here. We can actually hide a lot of these chart patterns, but what we're actually going to cover here is one strategy you can use. So as the topic of this video is $200 a day leverage trading Bitcoin. So the key here again is to use leverage. You can do these on platforms like Femex, Bybit, and FTX. I'll have them linked in the description below. All great platforms. Bybit's one of my top ones. Femex I also absolutely love. You can trade derivatives. You can trade futures. All these different things in there. You can make money when the markets go up. You can make money when the markets go down. Doing a short or a long position. If you think the market is going to go down and you have technical analysis to back that up, as well as, maybe some sentimental analysis, what you can do is basically short or long the market based on this and combine multiple different ways of analyzing the markets. Okay, so now let's dive into the exact strategy you can use to do this even easier. So very, very short time frames you can do this on. So let's just go right here. So the two key indicators you're using, I like to use, are the MA ribbon and the Bollinger Bands. But we can even remove the MA ribbon, the moving average ribbon, for just some simplicity. All right, so now you see you have the Bollinger Bands. You might be asking yourself, well, what does this mean? Obviously, if you're watching this video, I hope you understand that, green candles versus red candles, that's very, very basic things. Price action moving upwards, green candles, price action moving downwards, red candles. Then you understand the body of the candle and the wick. The wick is the little line leaving, like this, for example, this little green candle, that would be a wick. This is the body. That's the top wick, okay? So very, very basic stuff. I hope you understand that. That's not really what we're focusing on in this video. What we're focusing on is a nice little strategy so you can make money on a daily basis with this market. And again, let's just cover this. So the Bollinger Bands. So this middle line, you can kind of see these as rubber bands. So as you see, price kind of bounces in between these, and it's not always exact. When price pushes way past it, typically it snaps back down. But typically price is bouncing in between these. So you can see this just historically, and it's not just with Bitcoin, it's not just with crypto, it's with any market. If you're trading Forex, currencies, or you're trading stocks, it's literally the same thing. You can literally see price just bouncing in between. When price really pushes out of the Bollinger Bands, it snaps back in the opposite direction fairly quickly. So, and again, this is just typically what happens. There can be an anomaly or a black swan event in anything like this. So, you see right here, it really, really pushed down and then snapped back up. So it's very interesting when you look at this, and this is on the 5-minute time frame. So for this strategy, what we're going to be using is the 5-minute and the 1-hour time frame. So on TradingView, again, that's what I highly recommend you use. You have 1-hour time frame. You can see right here. Boom, boom. 1-hour time frame. You see our past little $10,000 over there on the right, but you have 1-hour time frame, and then you have the 5-minute time frame. So to start the strategy, what you would actually want to do is make sure you have Bollinger Bands on, make sure you have volume on. I'm not going to cover exactly how you do this with volume. That can be another video, but just to keep it simple, let's just use the Bollinger Bands for now, just so you kind of understand this a little bit better. So the key thing you're going to look for here is a bullish pattern on the 1-hour time frame. So again, a bullish pattern on the 1-hour time frame. What does this mean? Well, you want to see price not just above this middle line. So if it's above this middle line, that means it's bullish. But ideally, you have it around here. So if it's holding around this red line, anywhere really in this area, do not make the trade. You want to have a confirmed bullish pattern. So currently, right now, this is what are we on? January 6th rather of 2021. We're in a nice bullish pattern right here. You can see. And the interesting thing is you'll be able to check my work on this and see if any of this came true. I'm recording this real time. So we're in a nice little bullish pattern here. We're bullish right here, bearish right here, bearish right here, bearish right here. This is just kind of to show you some examples. All right, let's see. This is a bullish pattern, bullish, bullish, bullish. We had bearish engulfing candle right here. Then we were bullish, 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 bearish right here. So that's just to show you basically how you can understand this market. So understanding that these bullish and bearish patterns really, really help us analyze this whole market. So once you understand that strategy on the 1-hour time frame, let's flip to the 5-minute. So on the 5-minute, you have something that's even more interesting. This is how you enter the strategy. This is how you enter a trade. So once you confirm that you're bullish on the 1-hour time frame, you can now look for an entry point on the 5-minute time frame. So again, we're using the 1-hour, the 5-hour. We're using the Bollinger Bands. We're looking for a bullish pattern in the Bollinger Bands, and then now we're looking for a bullish engulfing pattern. Now, candle rather. What does this mean? A bullish engulfing candle. Okay, so let's move this up a bit. Now you can see this really, really nicely. All right, so what a bullish engulfing candle would show you is while you're bullish, so again, you're up here on the 1 hour. This is the 5 minute, but this is, remember, the 1 hour. You're right here. While you're there, you flip to the 5 minute and you look for a bullish engulfing candle. So a bullish engulfing candle is a red candle, so a price action going down candle, followed by a larger green candle. So right here, that's a bullish engulfing candle. Let me just point out a few more. And these are always going to be on this bottom half of on the Bollinger Band. So it's always going to be under this red line. So while the 1 hour is above it, you're looking for an entry point below it. And ideally, it's closer to this bottom band. So like I'll show you some ideal entry points. Let's get rid of these lines real quick, and then we'll wrap this video up. But you kind of understand the basics of this. We can do a more in-depth video, but this is the very interesting thing. So, right here, there's different ways to analyze this, but like, for example, this might be a nice little entry position right here or right here. And if you did this, for example, you could do you could draw out a nice little long position. So let's say you entered right there. You do a nice little long position right here. You enter a trade. And the thing here is it's going to be very, very small percentages. But again, just to reiterate, the reason we're using leverage is because you can have a massive impact even just on like a 2% or a 1% gain. But let's say you're targeting around this level. You're only risking even lower than that. Well, you're only risking 1%. So let's say you're trading with $100. You're literally risking $1. And obviously, if you're doing leverage trading, you're going to risk a bit more than this. So, like, if you're doing leverage trading, there's a chance you get liquidated if you don't set a stop loss. That's why this is so important. You can do this on the platforms we discussed, like FEMX and Bybit, but your potential gain is 5%. So, you're doing, let's say you're really, really confident on this. Let's go here. Yeah. So, you're really, really confident on this. You think this is a nice position to get into. What you could do is open this position down here, like as we kind of showed. Remember this nice little bullish engulfing pattern. Enter there, sell around this level, that top level, and that would get you a nice little 5% gain, about a 5% gain. So again, let's say you're doing that $100, you're trading on 20x leverage, so you're controlling $2,000, 5% of $2,000. You do the math there. It's pretty damn easy to understand how simple this is. So you basically just made $100. I hope you understand that math. I'm not going to do all the math for you because it's one of those things you just want to get used to trading. But let's point out some kind of almost better bullish engulfing candles. So again, remember for bullish engulfing, we're looking at right here. So we're looking at the trends to be under this line, this middle line in the Bollinger Bands. That's really the key here. So you want to have this kind of eye on situations like this. Although these are not exactly bullish engulfing candles, that's what you want to be looking for. So let's go back in history here. And you can actually do the inverse of this. Okay, so right here, perfect. This is a nice bullish engulfing candle. I mean, this would be a perfect entry position. So you see red candles wicking down. On the 1 hour, again, keep in mind you have to be bullish on the 1 hour. So you have to be right around this area on the 1 hour. And you see red candles wicking down. You see a short red candle, but a long green candle to follow that. So that is a bullish engulfing candle. So that would be a nice little position to enter into. So that would be, that's a really nice position. So, this is the type of trade where if it's that confident, you can make, this could be your one trade of the day, walk away, go enjoy the rest of your day, do a meditation, read, whatever you want to do. You don't want to just be staring at the charts all day. So let's say you enter a position right here. You set your stop loss real tight, just so you're not risking a whole lot. And then you target these levels, right over here. So you would end up selling right around here because you're setting this little position up. So you have around let's see, what is that? A nice little 4% gain. So again, the very small position, but again, this is I would be very, very confident on this, because what you see here is a perfect entry position. That is a perfect candle. Here is another perfect candle. Bullish engulfing candle. And again, as I said, you can do the inverse of this. So that can be another video. And the inverse would be shorting this. So you'd be bearish on the 1 hour. So on the 1 hour, we can just show you real quick. Let's go right here. So currently we're not bearish on the 1 hour, but if you were, for example, let's do a nice little example of this. Here, this is a decent situation. So let's say you're right here. Again, you want to have volume supported trades. That's kind of for another video, but so you're bearish. All right, so you confirmed you're in a bearish pattern. Now you're going to look for a bearish engulfing candle, which is basically just the inverse of a bullish engulfing candle. So what it would mean is you're looking for a entry point on this top band, so right up here. So that's even a nice one right there. So you saw a small green candle followed by a larger red candle, and then you would set up a short position for around this level, and you can make, again, multiple of these. That's kind of the thing, since you're trading on the 5-minute time frame. You're kind of doing quick entries, quick exits, and targeting, not risking a whole lot. You can always move your stop losses and things like this. You can see more examples of these, but you get the point with this. Just to reiterate, we're using the 5-minute and the 1 hour time frames. You're looking for either a bullish pattern, that's what I recommend, especially in a bull market, or a bearish pattern if you want to short. So again, if you're looking for bullish patterns, you're going to be in a long position. If you're looking for the opposite, you're going to be in a short position. Then you switch to the 5-minute. You look for the corresponding, if it's bullish, you want to look for a bullish engulfing candle on that bottom band on the Bollinger bands, and you want it to be volume supported. And then if you're looking for a bearish candle, you have to be bearish on the 1 hour. So this has been kind of a long tutorial, but you understand, with leverage trading, this is all possible. We will have some platforms you can use linked down below. Femex, Bybit, and FTX are great. Thank you very much for watching. If you enjoyed this video, please leave us a like and subscribe. Let me know if you like this more technical analysis style video, or you like kind of the more face-to-face style video. We'll definitely switch it up here in 2021 and kind of find the most optimal version of doing this. Also, I can make much more videos on, making money daily, how you can do this with investing, how you can do this with business, really anything like that. Thank you very much for listening. If you enjoyed this, please leave us a like, hit that subscribe button, hit that bell button, and click all. Also, let me know in the comments down below what you think of this strategy, if you've used it successfully. And keep in mind with all of this, I'm not a financial advisor. This is purely for educational purposes. You can test this out yourself. I highly, highly recommend paper trading, so not actually putting your own money in it if you're not willing to risk this money. Never invest anything you cannot lose. This is key when investing. So paper trading allows you to kind of test out the strategy for yourself, see if it works in different markets, crypto, forex, stocks, all of these different things. And again, thank you so much. As always, invest global, and until next time.